But we are in the midst of the winter funding season for startups. We've seen funding dry up. We've seen many startups actually go down the road of debt to raise money and increase their cash runway and perhaps just stay in business. In the middle of all of this, what we've actually seen is 8i Ventures close a new fund. 8i Ventures is an early stage startup fund. Its portfolio includes the likes of Blue Tokai, EasyTap, M2P, as well as Slice. To understand what's going on these days when a fund is trying to close, when it's trying to raise money from LPs, other investors, HNIs, family offices, let's go across to Vikram Chatra, the founding partner at 8i Ventures, who has very kindly agreed to step out of a Fintech festival in Singapore to be here on ET Now on Startup Central. We really appreciate you doing that, Vikram, and joining us all the way. Tell us more about the fund close.
Thank you, Nandar. I'm glad to be here. Delighted to announce the first close of our second fund. Our second fund target is 50 million, and we've raised half that capital. 90% of our Fund 1 LPs actually returned to invest again in our second fund. The first fund has done, very well. We are up about 270% with 100% IRR, and we made a 36x return, returned 27% of the capital back. Not to bore you with all these numbers, but I think that's what LPs look for. They look for high returns and also good distribution. So we are very excited about the years ahead. We believe Fintech to be the single largest venture opportunity in India. And first fund was, our view was that consumer payments and credit is $1 trillion opportunity. And over the course of the fund itself, over the last 3 years, we've seen digital payments to merchants rise from about 200 billion to more than 700 billion now. And as we look ahead, we believe consumer will continue to grow, and the next big opportunity is B2B, B2B Fintech, which we think is the next $1 trillion opportunity. So we would be putting on a lot of investments in this space.
Okay, before I go into B2B Fintech and why you think it's a hot space, you said that almost every single limited partner has returned for the second fund. Well, most of your limited partners from India. We started calling the domestic investors shock absorbers in the public markets. Can we call them that right now in the private markets as well, with this recession that we're hearing so much about in US and Europe?
I would prefer to call them believers.
I understand that, you've got family offices, prominent family offices, Sulgankars, who are of course related to the Ambanis as well, the DSP family as well. Talk to us more about that.
So, these are folks who were in our first fund. And, we built a close relationship with them and we delivered results. And they took a long-term view of the opportunity that lies ahead. Keep in mind that most of the large family offices have fairly large exposure to public market equity. And, today the internet is barely 1 to 2% of the listed market cap. So anybody who wants to have exposure to the digital economy has to invest in the right VC funds. And we have very rapidly emerged over the last few years as, among the top seed funds with a strong focus on fintech and e-commerce.
Okay. Now, can you tell us a little bit, there is a winter season, and in the middle of this winter season, you managed to close the second fund. Are you going to write the same size checks? Will you make fewer investments? There is a lot more uncertainty. The expectation is that maybe all the startups will not survive. And anyway, this is such a risky asset class. Give us a little idea of how LPs are feeling, your investors are feeling.
Look, LPs who are looking at this from a long-term perspective are not going to look at day-to-day market fluctuations when they're taking, long-term bets. India is a secular story as far as digital economy is concerned. And what we are seeing is digital payments and credit in particular, there is no slowdown. We continue to see strong month-on-month growth between UPI and card payments and so on, sometimes in the range of 3 to 5% a month. There is definitely a slowdown in funding. And we think that was, so I would urge founders to be more patient. And, we are here for business. We will continue to write checks at the same pace. We, in fact, are writing much larger checks from this one. We expect to write $1.5 to $2 million seed check where we're leading the round and double down in the next round and go up to 10 million over the life of the company. So we're open for business. We expect to write about 15 to 20, invest in 15 to 20 companies for the next 3 years.
Open for business, you're going to write bigger checks, and now tell us how can the founders then get in touch with ATI Ventures?
You can reach me at vikram@ativc.com. I'm available. You can reach me on LinkedIn. If you reach me directly, I will respond to you. That's a promise.
You'll respond with a no as well, or you'll respond with not interested, not now.
Everything.
You
I've
go
been a
through every
founder
email?
myself. Yes, Nayantara, I've been a founder myself. The reason I set up this fund along with Vishy, who's my partner, we want to set up the VC fund we wish we had. We want to be the VC we wish we had as founders and operators ourselves. And so we believe that our founders are our clients, and we will answer every single email as we do. And I think, many founders appreciate a no if you give them a good reason. And what they don't like is, blank silence.
Okay, so that's, I'm sure every founder will be delighted to hear that founders that have turned VCs, VCs that want to be VCs, every founders wish they had. Now, you've also given us a little bit of idea of things that you're finding hot. B2B Fintech. You're talking to me about Fintech at a time when we're seeing such massive sell-off across the world.
I think Fintech is not the only asset class. I mean, it's across the board what is happening right now. So this is normal for consolidation periods. And from here, the leaders will emerge, the category leaders will emerge. Neither we must not forget that the category winner is typically worth more than all the players to put together. So as we emerge from this downturn, you will see the winners become larger and more funded, and probably create much more value for shareholders coming ahead.
Okay. So I tell you what, Vikram, thanks for telling us what the philosophy behind the fund is really going to be. You're going to write bigger checks. You're going to be in business. But the one question I also want to ask you this is, a lot of times now when I talk to VCs, they're apparently not even entertaining meetings if a startup is not profitable or about to break even. Are you folks going to be the same way?
Look, I'm an early stage VC. I'm investing. I'm writing the first check. So it's unreasonable for me to expect that every company I meet is going to be profitable. Our path is to put them on a path of profitability, and we typically work with our companies the first 100 days, 180 days, and get them into the right space. So I don't think founders should be worried about whether they are. We're happy to invest in pre-revenue and early revenue companies.
Okay, good to hear. And Vikram, I'll tell you what, you're going to be back here on ET Now, on Startup Central after that first check.
Absolutely. Thank you. Good. Thank you for having us.